another opportunity to invest in the bond market. Welcome to a long-term investment of a 9.5-year horizon that will pay you a return of 16% paid biannually in March and in September, an opportunity to ladder your bond portfolio. This issue has a huge taxes saving of a whopping 5% as reduced from the usual 15% to a low of 10% withholding tax that will be levied on the interest income accruing from the investment in this particular bond. Welcome to an FXD1 2024-10 for your investment. We'll look at the important dates of this particular issue after a 3-second break. Welcome back. To begin with, I would like to extend our gratitude for the support that we are receiving from majority of you through this number. This number is available in our description. It's our support line. If you would wish to support this kind of content, please would appreciate, and for any consultation is welcome through WhatsApp. If you are new to the channel and this is the kind of content that you would like to be hearing from us, then subscribe to the channel and hit the notification button so that once we upload another video, you'll be notified by YouTube. Engage us in the comment section and don't forget to give this video a thumbs up. First, let's look at taxation of this particular bond. If you invest in the bond market, you'll have not noticed that there is a particular way bonds are named. Bonds names are divided into 3 parts. There is the first part, either the IFB or the FXD. There is the second part and the third part. The first part indicates the type of bond. If it's IFB, that is an acronym for infrastructure bond. And those particular bonds are characterized by the fact that they are issued tax-free. And that is the main distinction between the IFB and this second type of bond, that is the FXD, an acronym for fixed coupon bonds. Fixed coupon bonds are taxed at a normal withholding tax rate of 15% of the interest income and not the principal investment. Sometimes, depending on the issue, the rate of withholding tax is adjusted, and in this particular issue, the rate has been reduced from 15% to a 10%, giving you as an investor a saving of a whopping 5%. That said then, this issue gives you a return or a coupon rate of 16%. And consequently, because of the tax or the withholding tax of 10%, it means that the effective coupon that hits your account shall be a 14.4%, arrived at as 16% minus the 10% withholding tax. That gives us a 1.6, and once you net it off, you get the 14.4%. Number 2, we have to look at the dirty price. Dirty price of a reopened issue. This particular issue, the FXD1, the suffix on the acronym of a bond on issue. For example, an IFB1, and in this case, an FXD1. That suffix, the numeral value, indicates the number of reopening or reissue of that particular bond. And therefore, for this particular one, it means being FXD1, this bond is being reopened or reissued for the first time in the same year of issue, because this bond was originally issued this year in March, and now it has been reopened for the first time, and that is the reason it indicates FXD1. This bond pays coupons in March and September. And this month, when it is being reopened, being September, we have to look at the value date, because dirty price is the resultant price after considering the accrued interest. Accrued interest will look at the previous coupon payment and the current coupon payment preceded by the reopen. This bond or this reopening coupon date, which is 22nd every September, coincides with the value date of the issue. The value date being the last day to facilitate your payment for the investment. And therefore, because accrued interest, we have to consider up to the value date and the coupon date, it means that this issue or this particular reopened bond has zero accrued interest. And therefore, it means the dirty price for this particular bond shall be the same as the issue price. So for this particular bond, we do not have a dirty price, or the dirty price is the same as the issue price. Number 3, whether this issue shall be at a discount. The most important thing that we look at to determine whether an issue shall be discounted or not, we look at the coupon that this issue shall pay and compare it with the market interest rate. As earlier indicated, you get the market interest rate by looking at the coupon of a 364-day treasury bill. And looking at the two, the market interest rate is slightly higher than the coupon rate that this bond shall pay. And that does not make this issue a bad investment. Actually, it makes it a good investment. In this case, it means by virtue of the market offering a higher price as compared to the coupon price of the bond, that poses a challenge to the issuer, meaning that the market would want to invest where they are getting a higher return. And consequently, for this issue to receive investment, they have to give us a price that is comparable to the market price. And for that reason, the price at which we are going to pay for this investment shall automatically be discounted. So we are expecting a price of an average of about 90 shillings for every 100 or thereabout as per the investments. The other thing that we need to look at is the auction period or the auction date. The auction date is the last day of the sale period. This bond shall be sold within the period of 4th September to 18th September. Or, that is to say, your bidding period. Your bidding period is open up to 18th September. If you would want to invest in this bond, you have up to 18th September to place your bid. And these investment opportunities shall only be available to those investors who have existing active CSD accounts. You can open an account, your CSD account, during the same period and place your bid. In the description of this video, we shall indicate a link to the videos that will enable you to create your account, to place your bids, and pay for those particular bids, because those areas have already been effectively covered in our previous videos. So the auction date shall also happen on the closing date of the bidding period. And for you to successfully bid, then you must make sure that you have placed your bid by 10 a.m. of 18th September. In the afternoon at 2 p.m., that is when the auction shall happen and close on the same day. That means closing of the auction opens the payment date. You'll be given, or it will be made available through your transaction tab in your DAO-CSD account, the payment or the reference number, the 8 alphanumeric value that you're supposed to use when you are making your payment shall be available through your DAO-CSD account and also made available via email and SMSs to your mobile number on Friday of 20th September. Then after that, we usher in the payment period. From that Friday to 23rd of September, which is the value date, you'll have enough time to make a payment for your investment. That is consequent to say, you have between Friday, the 20th, and up to 23rd of September to make payments for your investment. Once that has been done, then bonds shall be offloaded in the secondary market for trading. One important thing, as per the question that I've received numerously through my previous videos, is the ease of sale, or if one wants to liquidate their investment in bonds. And I would say that it's obvious. You will always get a person to buy your bonds. And in any case that you don't get one in the secondary market, CBK is a buyer of last resort. In order to enable, CBK does that to ensure that there is an active market for its investment. If CBK doesn't repurchase or rediscount already issued bonds in the market, that impossibility to sell will deter or make many people not want to invest in the government. And for that reason, CBK always buys your bonds as a last resort. And in that case, CBK will rediscount your bonds at a 3% lower than the prevailing market yield or coupon, whichever will be higher. So consequently, you still get a nice price for the sale of your particular bond. Lastly, to conclude, if you are new to the channel, please don't forget to subscribe, engage in the comment section, and give us a thumbs up as you share this video with another person. Thank you for watching.